This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 249 is brought to us by Apex Omni. So if you're American and you want to do almost everything you can do on ByBit, you're going to love Apex Omni. It's DeFi, which means it doesn't matter where you are in the world. Now, the downside with DeFi is, the biggest downside really is the customer service angle, but we've taken care of that here. You and only you can have the combination of DeFi trading and your own personal customer service representative. That just does not exist in DeFi at all, but it does for you only if you click my link, which you can find down below in the Apex Omni blog, down in the description. It's a very short blog. Read it. Click my link, get yourself signed up, and get all of the bonuses you're going to get now and into the future with Apex Omni Pro. Because with Apex Omni, trading is your business. It is the 10-Minute Contrarian Podcast, and you might have read the title of episode 249 and thought it might have been a bit hyperbolic, but you have to remember that I really do not employ those tactics in much of anything I do. You have to remember, all of my material is pretty much how-to and how not to gain followers and clicks and make money. It's pretty much the opposite of all that, all for the purpose of making sure that I have the real ones on board. But I'm not kidding when I say that this is almost certainly going to be the biggest news of the year for Bitcoin in 2026. I just don't see how it couldn't be. And if you kept reading on into the description and the show notes, you might have thought, another ETF? There's already like 10 of them. Why is this a big deal at all? Well, it's a big deal because you are dumb and ill-informed. But that's fine. We're going to fix that today. Now, I get it. On the surface, it doesn't really look like that big of a deal. But if you dig even just a little bit deeper, you're going to see what a really, really big deal this new Morgan Stanley Bitcoin ETF is and what it's going to be. Again, while I'm sure the majority of you, I hate to say it, but I'll bet the majority of even my listeners, the realest of the real, still pay most of your attention to useless randos on Twitter, hyperbolizing and cheerleading way too much at the top and dooming way too much at the bottom. While you guys are paying attention to them, I'm busy watching what the big money, like the real money, is actually doing. Because they're going to be the big money long after we're all dead. And there are many reasons why. But the number one reason is they bring on the best and brightest they possibly can. And those people generally understand money and history pretty well. And you do this long enough and those people get decades of experience. They don't go on to X and say the things your average people say or do the things your average people do. They get it. They understand the long game and they understand where the puck is going. Sometimes it takes them a bit longer than the rest of us to figure this out. Sometimes there are reasons why they can't just jump into every hot trend that appears as it appears. They have to give it time to actually set and become a bit more established. And so while we, the early adopters, are busy making fun of them for being later than we were, they're just quietly putting down the frameworks which are going to keep them at the very top of the financial world, again, long after we've all passed on. And Morgan Stanley is going to be one of those places. They are very unique to any other Bitcoin ETF issuer we have seen so far. Again, this is different. If another asset manager, like even a place as big as State Street, a place that people don't even realize just how big State Street is because they don't hear about them a whole lot. If they came out with a Bitcoin ETF, I wouldn't even really pay much attention to it because it would just get lost in the shuffle. But this is different, and I'm going to tell you why. And if you stick around to the end, you guys know I always reward the people who do that. There is some bonus information here you are not going to want to miss. Now, every time I make episodes like this, there's always a few people who meander into the comments section on YouTube. This podcast does go to YouTube, by the way. All of them do. and complain that Wall Street is taking over Bitcoin. And I'm like, yeah, okay, that's fine. But I mean, why are you complaining about a ship that has sailed years ago? What's that going to do? You're pretty much proclaiming to the whole world that you are just completely unable to adjust to what's going on in the world, and you can't play the game in front of you. Because no matter what happens, good or bad, we all must play the game in front of us. Do you think we want $120 a barrel West Texas crude oil? No, nobody does. It's bad for the world. But if you see the writing on the wall and you position yourselves for this like we did here, well, then it takes a bit of the sting out of it because we've already profited quite a bit from it. So we, again, get to be one of the few people who doesn't sit around and complain all day about high oil prices. These are the type of things I put out on X, like I did yesterday. But anyway, I shouldn't pick on all of you because there still are quite a bit of you out there who understand this, you get it, and you're ready for this news. You're ready to see what's going on. So let's go ahead and bring that to you. Now, the specs on the Morgan Stanley Bitcoin ETF, ticker symbol MSBT, like I said before, is quite unique. It's not just going to be lost in the shuffle of the other 10 Bitcoin ETFs we already have. And remember, too, who is going to be their biggest competition here? Well, it's going to be BlackRock. And again, bad news for the libertarians, as there's nothing but bad news for libertarians all the time, because that's just the way the world works and you have to adjust to it, is I believe BlackRock's IBIT is over 85% of the total Bitcoin ETF market. And the reason for that is because when institutions in particular want to give their clients Bitcoin exposure, that's the route most of them want to go. They don't care about the perceived evil empire that is BlackRock. When it really comes down to it, they want to go where they feel is the safest route. I am also, if you're a libertarian out there, I am also on your side. At the very least, I do hold Bitcoin in a cold wallet and in a hot wallet and in ETF form. And when it came time to choose, I did not choose IBIT. I chose Fidelity's offering, FBTC, because I saw very little difference in between their product and BlackRock's. And all things considered, if you give me an equal choice, I will choose the not BlackRock product. And this is somebody who already has BlackRock ETFs in his portfolio. But back to the real news here. So we know that BlackRock is going to be Morgan Stanley's main competition. So what have they done to not only differentiate themselves, but to separate themselves from BlackRock's IBIT? Well, for one, the cost is quite a bit lower. This is going to be the cheapest Bitcoin ETF in the industry to date. So you were looking at an extremely low 14 basis points for the fee here. To compare, SPY, one of the largest S&P 500 ETFs out there, which are historically low, has 9 basis points. Now, how does this stack up against the competition? So it's 1 basis point below Grayscale's offering. Now, there's other things you have to worry about with Grayscale's offering, but they have 15 basis points. Franklin Templeton has 19. Bitwise has 20. And then, finally in 5th place, with a pretty wide margin here, is going to be IBIT with 25 basis points. So I'm pretty sure Morgan Stanley's not worried about Grayscale, Franklin Templeton, or Bitwise. They're just not relevant in the space here compared to IBIT. They're concerned about IBIT. And when you're talking about something that seems kind of small to us, a 9 basis point difference, when you're talking the amount of money that comes into some of these things, it can be pretty significant. Your average person doesn't worry about yield, for example, because they think the percentages are too small. When rich people and big industries really, really care about yield, because again, they are just flat out smarter and better than your average person when it comes to finance. So I know when I say 9 basis points to your average person, they're like, big deal. But it actually is a big deal to real money, and that's what we are concerned about here. That's what we care about. This is who we watch. and this is who we are looking to emulate. So apart from the cost, which again is a bigger deal than you probably think it is, during this process of filing for their own Bitcoin ETF, Morgan Stanley also filed for something called a National Trust Bank Charter. Now, without getting into too much useless detail here, what it really allows them to do is it allows them to build this entire infrastructure themselves when it comes to this Bitcoin ETF. They get to keep almost everything in-house, which means they are actually going to custody their own Bitcoin here, unlike most of the other ETFs out there who use Coinbase. Most Bitcoin ETFs out there are heavily reliant on Coinbase, especially for their own custodial needs. And so tell me again why Coinbase is not a screaming buy as well at these prices. I'll wait. Anyway, this kind of goes all the way back to when I was talking about Arweave and how when it comes to data space, most of the world is very heavily dependent on Amazon Web Services. And so if it ever goes down, which it has in the past, you see the ripple effects of something like that because it's just so heavily dependent on. And if they ever decide to go woke again and say you can only talk about certain things, and if you don't, we'll punish you, well, then again, you really don't have a choice but to comply, or either comply or completely switch everything over, which is going to take more time and money than you probably have. So being able to have everything in-house is a really big deal. It's probably one of the reasons why Morgan Stanley can charge less than every other Bitcoin ETF can. Well, now to round off the specs, just so you know, Coinbase will actually handle the on-chain security of Morgan Stanley's cold wallets, but they simply do not handle the custody, which again is rare. And for what it's worth, BNY Mellon, Bank of BNY Mellon is going to handle the cash administration and the transfer agency. But those are the only third parties who will play a part, and they will not play a part in the custody. But when it comes down to it, in my opinion, the lower cost and the disassociation from Coinbase in terms of custody are two very nice things to have. They are two very bullish things to have for Morgan Stanley. But this is not really the thing that is super bullish for Bitcoin. There are a couple things here. Primarily, Morgan Stanley is an actual bank. Now, most people don't really look at it as a bank because they're not a retail bank. There's no Morgan Stanley ATMs out there that you can walk by. There's no branch offices, at least not very visible ones that you can really see. But this is just how private banks work. Now, there are a lot of commercial banks out there that have private wings to them. JP Morgan's a perfect example. They have Chase for plebes like us, and then they have JP Morgan Wealth Management, the private side, for anybody who has $10 million or more to invest. Morgan Stanley is just all private. They are for the actual elite in terms of money. I guess for familiarity's sake, I think like Jake and Logan Paul both have their money there. But it's all ultra high net worth clients. Now, Morgan Stanley, unlike what you would call asset managers, so Fidelity and Franklin Templeton and places like that. Asset managers is kind of a strange term because they do manage, but they don't advise. So Fidelity is not going to come to you and say, hey, I advise you put this much money into Bitcoin. That's not really what they do. To where Morgan Stanley does do that. If you have your money with Morgan Stanley, they want to manage every last aspect of that money. That's just how private banks work. They don't really want you there unless you're going to let them handle most of the process. Now, most banks, or really every other bank and investment advisory service, if they're going to put you into Bitcoin, like I said before, they're going to put you into IBIT. And they're going to pay BlackRock those 25 basis points every single year. Now, do you think they want to do that? Well, probably not, no. But if you could do it better, you're going to do it better. And if you can skip those fees and not give your competition all the money, you're going to do that. And that's what Morgan Stanley's doing. And again, I don't think most people realize just how large this bank is. And now, if they feel the same way that a lot of these banks feel now, and feel like anywhere from 1 to 5% of your overall portfolio needs to be allocated into Bitcoin. In most cases, they're going to advise their clients put their money there. And in some cases, if they're allowed to, they're just going to go ahead and put it there themselves. Maybe not right away, but over time, they have now opened the door to allow themselves to do that. Now they're going to be a lot more motivated to do that because it benefits them to do so now and not their competition because of the way they have it set up. I mean, don't get me wrong. It's great that we had 10 Bitcoin ETFs already out there. That was a big day. That was a big step. I say it all the time. You just need to open the door. It doesn't matter if people are rushing through it right now or you've just simply given them the option to rush through it later. The fact that we got here is really the big bullish factor. So while we're not going to see the mania we saw before when all these ETFs went online at the same time, we have now rather gotten big money on board in such a more important and impactful way than we have before. I wouldn't be surprised at all if the only real competition in this space, is, at least as far as the United States goes, which is going to be Goldman Sachs, ended up eventually going the same route, which means you could just double what you're probably going to see right now from Morgan Stanley going forward. Now, the part that I kind of saved towards the end. But when this competition really starts to unfold, and these banks and these large institutions really want to start putting anywhere from 1 to 5% allocation into something like Bitcoin, how is that going to go down? Because remember the thing we always say here about Bitcoin, we talk about the scarcity. There's only so much to go around. And if you have the Morgan Stanleys and Goldman Sachs of the world and whoever else decides to come in along the way, around the world, and they're all competing for this allocation, guess what, contrarians? There's not going to be enough Bitcoin for this. Not even close. So as I was doing my research for this episode this past week, I also stumbled across something very interesting. So some of these stats you might already know. Some of these you may not. I certainly didn't. But in terms of Bitcoin, we all know there's only going to be 21 million ever. And 20 million have already been mined. All right, so we know that much. So as far as more coming online, there's only going to be another million. So if you can imagine this with something like gold, if we're only going to be able to mine a small amount for the rest of eternity, that's going to make gold way, way scarcer than it is now, and you're going to see dramatic inclines in the price in a fantasy scenario like that. All right, but that can't happen with gold. But it does happen with Bitcoin. I cannot stress the scarcity element of these things enough. I could pretty much dedicate a whole podcast to me just repeating myself and explaining this in different ways and just sounding like a raving lunatic every episode. But let me build on this a little further, right? So according to something called blockchain forensics, their numbers match up with mine pretty well. I've always said, okay, there's 21 million out there. Realistically, there's probably more like 16 because of the amount of Bitcoin that people have either lost or died with. Again, this has been around for about 15 years. People have died, and more people will die with their Bitcoin in the future. So you have a further deterioration factor there. But the blockchain forensics said anywhere from 3 to 4 million has already been lost forever. All right, so we're talking about more or less 16 million, not 21 million. Or should I say 17 million, but 16 million are already out there. And we only have another million to go to get to 17. And again, that's not factoring in the amount which will be lost in the future. So if those numbers are right, we're not even talking about 17 here. But here's the real interesting stat, and this came from Glassnode. And I don't know, this number could be too high, but it could also be too low. I don't know. But if this is true, 13.5 million Bitcoin is being held by illiquid entities which refuse to sell. This is always a number I wondered about. Out of all the Bitcoin out there, how many of them out there are being held by diamond hands who just have absolutely zero interest in selling? And I think we can get a bigger picture of that during a bear market. We're like, all right, Bitcoin lost, almost half of its value in a really short amount of time. How many people and how many companies and how many banks and investment firms and all that said, okay, yeah, that's great. We don't care. We're not selling. 50% drop, who cares? That's what Bitcoin does. And we get that. We're hodling. Apparently a lot more than I thought. 13.5 million, again, out of a possible 17, is pretty much off the market for good. Well, okay, that really changes things, because now you're dealing with something called float. If you've been a hardcore trader in any space, maybe not Forex or crypto, but like stocks, or I go all the way back to my penny stock days when we're talking about float. Float is really like, okay, how much is actually out there to trade? I know this many shares have been issued, but how many are actually out there to trade in the pool? So for Forex traders, think of the difference between the Forex market and the spot Forex market. There's a huge, huge difference from what is out there and what is actually able to be traded. On the No Nonsense Forex YouTube channel, on my largest video that I've ever done, the Big Banks video, I still get to this day some negative comments from people who just don't understand the difference between the Forex market and the spot Forex market. And so I just want to make sure everybody here is aware of this before we move forward. But yes, float matters, because that's really all that's out there. It's not these institutions and whoever's left in terms of the retail market fighting for 21 million or 17 million, whatever, Bitcoin. No. They're only really fighting for about 3 to 4 million right now. And those Bitcoin are going to get sucked up really fast. Again, at these prices, there is not anywhere near enough Bitcoin available for even a small fraction of some of these high net worth clients, these ultra high net worth clients, to put 1 to 5% in their portfolio. The only way this would ever be allowed to happen mathematically is if Bitcoin, the price of spot Bitcoin, was multiples higher than it is right now. I even went and asked Grok, say, okay, let's have a fantasy scenario to where only Morgan Stanley clients got all the rest of the Bitcoin and nobody else got any, all right? And they put a 2.5% allocation to it in their portfolios. What would the price of spot Bitcoin have to be to make this possible? Now, you might think 2.5% is on the high side, but don't forget the other side of this equation. Morgan Stanley's clients are the only ones who get to have Bitcoin for the rest of eternity. That's not realistic at all, okay? But I had to have something to enter into this equation. But when I did that, for what it's worth, Grok ran the numbers, and it put the price of spot Bitcoin, just for this one scenario, at a 2.5% allocation, at $235,000 per Bitcoin. That's the only way, even if you just stopped at Morgan Stanley and didn't go anywhere else in the entire world, for them to have 1 to 5% allocation in their clients' portfolios. I mean, let's just split the difference and say 2.5%. There's not anywhere near enough Bitcoin for this to even come close to happening. And we're talking one bank here, contrarians. I don't even think you guys who listen to the sound of my stupid voice every week really understand the scarcity side here. And that's fine. We've never had to deal with this before. That's why people don't fully understand it yet. But nobody understood the scarcity of silver for the longest time until they finally had to. as we've been saying on this show, when it comes to things like oil and stuff like that, it doesn't matter until it does. And this is not like something like oil or silver where more of it can just come back online in the future. It can because of miners, but we're talking, 450 Bitcoin a week? It's paltry. It's nothing. And it can't go above that. And then after the next halving, that 450 is going to turn into 225. And so many of you guys were all rah-rah about this when the price of Bitcoin was in six figures. I was. Because I don't think there's a bad time to buy Bitcoin. So it doesn't really matter to me. But my point is, you guys have allowed, going all the way back to what I was talking about at the very beginning of this episode, I have a feeling way too many of you guys have just let the news cycle and let this dumb, mushy middle narrative cycle impact you so much to the point to where you are afraid to buy Bitcoin at super discounted prices like we are now. You guys are the meme of everybody lining up at 100,000 and nobody lining up at 66. You guys have allowed yourself to become that meme once again. After we've already seen this situation play out in Bitcoin and in crypto so many times. You guys are sitting around like, I don't know. What don't you know? That cycles keep repeating themselves? That adoption only gets bigger? That we are going to run out of these things sooner than later? I mean, as far as I go, I'm going to tell you right now, I bought at 8,600. I bought at 120,000. But the way it stands right now, because there are other things I want to buy, I will still make sure that I am not going to let price get over 80,000 before I just bite the bullet and jump in and buy more. And when I say buy more, you guys know how this goes. I'm not really buying more. I'm just moving my money from cash over to something like Bitcoin. And I don't care if I'm wrong short term. Why would I be? It's already better money. My money-making days are not over. So if for some crazy reason I'm just so wrong about this, all these little cuckoo randos on X were right, and the Morgan Stanleys and BlackRocks of the world just totally missed it, then that's fine. It's not great, but it's fine. It's 25% of my overall allocation. But the upside here with something that is this established at this point and that is this now coveted by the largest institutions in the world has the upside it does. Again, this isn't even a once in a generational thing. This is once in an eon type thing. We get to be alive when a new form of money was created. Our great-grandparents, great-great-grandparents going 10 generations back, they can't say that. But we can. Which way, contrarians? It's not even really crazy anymore. We just get to be early.